Hi, this is James Shrug with Westpac London's end of market day report for Tuesday, October the 25th. Well, it's been a day of gradually deteriorating sentiment, certainly in equity markets, reflecting a range of developments, some related to Europe, some related to earnings in the US, and some related to economic data, particularly in the United States. I'll run through the events of the day actually. We've had reports come through that the EU finance ministers meeting, which was scheduled for tomorrow, has been cancelled. That was actually initially quite concerning for markets, but it has been confirmed, don't worry about this, that the EU Leaders Summit is indeed going ahead, and hopefully later in the afternoon, tomorrow, we'll get full details that have been sort of the plan to recapitalise the banks, to expand the European Financial Stability Facility, and the details related to the Greek haircut that creditors to Greece are going to have to wear. We should get details tomorrow, as had been planned. It's interesting though, in Europe, a lot of arguments have been apparent over the last few days. The Germans have been arguing with the French about the nature of the EFSF expansion. The French and Germans have been arguing with the Italians about their lack of commitment to budget deficit reduction, or Berlusconi's lack of commitment anyway. The Brits have been arguing with themselves. There was a Tory backbencher rebellion which tried to force an EU referendum, i.e. should Britain still be in the EU. It was defeated in the House of Commons today, but nevertheless it shows that there is still that anti-Europe feeling here in the UK. And of course the Brits have been arguing with the French, because that's just in the nature of the beast, they always do that. But the good news is, of course, that unlike up until 70 years ago, although there's a lot of arguments going on within Europe, at least Europeans aren't killing themselves like they did every 20 years up until, as I say, 70 years ago. And the euro is part of the process of integration of Europe that has led, you could argue, to the relative peace that we've seen over the last 7 decades. So in that sense, it's a good thing. Maybe despite all the mess we're seeing in Europe at the moment, maybe the alternative would have been substantially worse. Well, who knows? In terms of developments on the data front, in the US we had 2 different measures of house prices which were soft in August, and also there were back revisions which painted an even weaker picture. That was disappointing for markets. Consumer confidence in October fell to its lowest since March 2009, when the economy was in recession, driven by consumer concerns about the business environment and about the outlook for income. Actually, I should just add, Westpac's forecast was at the bottom of the range for that. The actual outcome was substantially weaker than even we were expecting. And we might recall that another measure of sentiment for October, published by the University of Michigan a week or so ago, it was also quite weak. So despite this apparent sort of improvement that we've seen in some economic data in the US, it doesn't seem to be impacting favourably on how households in America actually feel about the current situation and the outlook. The Richmond Fed put out its factory survey, which was quite weak. It showed, let's have a look, quite sharply weaker jobs, slightly less negative on the orders side. Shipments were more negative though as well. So a bit of a contrast to some of the other regional Fed surveys that we've seen that had some reasonable detail in them. The Bank of Canada kept interest rates on hold at 1%, and they dropped their tightening bias. They'd softened their tightening bias at their September meeting when they said that the need to withdraw policy stimulus had diminished. This time they made no reference at all to potentially changing policy. So, and they, in their forecasts, they actually explicitly said that they expect a recession in Europe. So aligning themselves with Westpac's view for 2012 and Europe. There'll be more on Canada tomorrow when they release their monetary policy report. That's the main sort of economic data today. We did also get reports from UPS and 3M, both indicators of how the economy is doing. UPS, transport, 3M because they make Post-its, and both those were disappointing. So the US market was on a negative vibe right from the outset, and it's kind of deteriorated through the day. So those are the main events. In terms of the markets, what we're seeing at the moment, just after 4 o'clock in London, is the Dow is down 0.9%, at 11,806. The FTSE in London down 0.5% today. The French market's down 1.1%, and the German market's just got a small decline of 0.1% at the moment. In commodity markets, a bit of a mixed bag. We've got crude oil up 2.6%, $93.66 a barrel. It actually was up even more sharply earlier on because of the sense that Europe was finally getting things done. But as I say, the European story has sort of taken a slightly more pessimistic turn as we've headed through the session. Gold prices up 2% today, $1,686 an ounce. Sugar's absolutely unchanged, and we've got copper prices down 1.1%. The Aussie dollar has traded a 104 to 105 range against the US dollar at the moment, and it's kind of in the middle of that range now at 1.0435 against the US dollar. Actually, speaking of Aussie, we've got the CPI coming up. That's the third quarter numbers. We're looking for a core inflation outcome of 0.6%, perhaps with a bit of downside risk, following what we saw in the producer price numbers earlier in the week. An outcome around what we're saying or weaker certainly would, for us, absolutely cement the case for a rate cut from the Reserve Bank. And the judgment then becomes, do they go in November or December? And of course, as you must know by now, our long-held call has been that they'll move at the December meeting, the first of a sequence of cuts that will extend into next year. Okay, I think that's about it for today. A big one tomorrow with all the developments in Europe, likely to be laid out by the EU leaders. I've got to say, this is just their plan for how they're going to deal with the European sovereign debt crisis. Tomorrow will not mark the end of the sovereign debt crisis, and I think there's been a little bit of element of market optimism that's kind of had that wistful hope. I think that's being eroded today. Anyway, back tomorrow.